This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back to Not Your Advisor with NYU Grad on Monday, August 18th. Hope you all had a great weekend. Speaking of which, thank you for all the well wishes and congratulations if you missed it. I made a post this weekend announcing a special secret that my wife and I are expecting our first child this October, a baby girl. So thank you very much for that. I will still be around. I do plan to take maybe 2 weeks from the time that we check into the hospital in October, but I'll keep you all informed. But let's just jump right into today's low volume session. And I keep repeating myself because it is what it is. It's 3:30 as I'm recording this, and the SPY has traded 32 million shares with less than 30 minutes to go, or about 30 minutes to go, against an average daily volume of 71 million shares. So it's like the market is basically closed. The bots and algos are trading amongst each other at this point. So I am going to cover some macro data points that I have shared over the weekend on Substack Notes. The first one being, and just bear with me here because for the free members, the cutoff point is like 3 minutes. So I want to cover some of this for everyone. If you take a look at the S&P 500 price to book ratio, the chart is in the show notes. We have never been more overvalued on this metric of S&P price to book. That's not great. The source of this data is Bank of America. It's even surpassed .com levels. The second one is the Richmond Fed Manufacturing Index. It dropped 20 points this month, or in July, the previous month. It was the second lowest since the 2020 pandemic lockdown. And this was the 19th consecutive negative reading. Look, the only silver lining here is each time that we've gone to this low of a reading, it marked the bottom and the manufacturing index started to climb. So that's the only silver lining I could find in this data. The last one, economic related, or I guess stock market related, is the ratio of the stock market value versus the 5 largest stocks. And this chart is bananas. The 5 largest stocks in the US are now 4.9 times larger than all small cap stocks combined. That is also at a new all-time high. So again, I remain convinced that we are closer to a top than a start of a new bull market. So you want to be on your toes.
Stand clear of the closing doors, please.